Hello learners, welcome to the video. Business transactions are numerous and it becomes difficult to record all the transactions in one book of primary entry. In our previous video, we learned about rules of debit and credit. An account is divided into two sides. The left side of an account is known as the debit account and the right side is known as the credit account. Debit and credit both represent either increase or decrease depending on the nature of an account. Journal is one of the books of original entry. The process of recording entries in the journal is called journalizing. Ledger is a book containing all accounts to which entries are transferred from the books of original entry. Posting, a process of transferring entries from books of original entry to the ledger. Now let's start our today's discussion, meaning and classification of subsidiary books of accounting. In business, many transactions may relate to receipts and payments of cash, sales of goods and their purchase. It is convenient to maintain a separate book for each such class of transactions. One to record cash transactions, another to record credit purchase of goods, and yet another to record credit sale of goods. The book of this type is called a book of original entry or primary entry. It is a special form of a journal, a subdivision of it. Journal entry is not passed for the transaction recorded in such books. They are posted to the ledger accounts. The system is called the practical system of accounting. These books of original or primary entry are also called a special journal or subsidiary books since ledger accounts are prepared from the transactions recorded in them and without this process of ledger posting. Trial balance cannot be drawn. Let us now discuss subsidiary books or subdivision of the journal. We had discussed earlier that it is practically not convenient to record all the transactions in one book of primary entry, that is, the journal. For convenience, the journal is divided into several subsidiary books. These are starting with cash book. Cash book is the book of prime entry used to record all money transactions, which includes cash and bank. Cash book is the most important subsidiary book because it keeps the initial record of cash transactions of the business. Next, purchases book. Purchases book is used for recording only credit purchases of goods in which the business deals. Next is sales book. A sales book is used for recording only credit sales of goods in which the business deals. Now, subsidiary books, that is purchases return book. Purchase returns book is used to record the returns of such goods as were purchased on a credit basis. Now, sales return book. Sales returns book is used to record the return of such goods as were sold to the customers on a credit basis. Next, subsidiary book is a journal proper. General journal is used to record transactions that do not find a place in any other journal or subsidiary books. All transactions should be recorded in one of these books before they are entered in the ledger. Now we'll move on to the advantages of subsidiary books. The use of subsidiary books has the following advantage. Starting with division of work. Since in place of one journal, subsidiary books are maintained, accounting work can be divided among several persons. Specialization and efficiency. When the same work is handled by a particular person for a considerable time, he acquires an expertise in it. He becomes more efficient in handling it. Thus, accounting is done more efficiently. Saving of time. Various accounting processes can be undertaken simultaneously because of the use of the several books. Thus, it leads to complete the work timely. Availability of information. Since a separate book is maintained for each class of transactions, information relating to each class is available at one place. Facility in checking. In case the trial balance does not agree, locating the error or errors is facilitated by the existence of separate books. Since the number of transactions is less in each subsidiary book as compared to only one journal, it is easy to locate the errors. Responsibility. Division of work results in assigning a particular job to a particular person. If an error is committed in recording, responsibility can be easily fixed. So what we have learned today is special subsidiary books comprise of cash book, sales book, sales return book, purchases book, purchase returns book and journal proper. I hope you like this video. Have a great day.